Right now, Yueda Digital Holding, ticker YDKG, is trading at $0.059 per share. That is a staggering 27.43% up on the day. And when most people see a move like that, especially on a stock that costs pennies, the first instinct is excitement. The expectation is that this is the ground floor, that this 27% jump is just the start of a massive run. But let's be perfectly clear about the reality of what we are looking at. This 27% jump isn't a rocket ship taking off. It's a brief, violent spasm from a stock that has been in a catastrophic freefall. This isn't a recovery. It's a dead cat bounce in real time. The story here isn't the 27% gain, it's the 98% loss that preceded it just in the last month. The expectation is that you've found a hidden gem, a cheap entry into the crypto and Web3 space. The reality is that you're looking at the smoldering ruins of a completely different company that just changed its name 6 weeks ago to attach itself to the crypto narrative. This is precisely the kind of trade that feels exciting on the Robinhood app, but can zero out an account faster than you can blink. Let's establish the common ground, the general belief. You see Yueda Digital Holding, and you see crypto. You see it just raised $28 million 2 weeks ago and another $180 million in August. The expectation is that this company is cashed up and ready to start buying Bitcoin and Ether. And at 5 cents a share, it's a leveraged bet on the entire crypto market. It feels like a chance to get investment help through a proxy, letting a company do the hard work of online investing in digital assets for you. You're not buying Nvidia stock at hundreds of dollars. You're buying thousands of shares of YDKG for the price of a nice dinner. It's the ultimate lottery ticket, and today it looks like your numbers are coming up. But this is where we have to challenge that entire premise. The reality is that Yueda Digital Holding, YDKG, was, until September 18th, 2025, a company called AirNet Technology. Its business had absolutely nothing to do with crypto. It was a failing, in-flight entertainment and advertising company based in China. The business was dying, revenues were collapsing, and the stock was evaporating. So what did they do? They executed a classic pivot. They changed their name to sound like a modern, digital-first company and announced their new business is to be a Web3 and digital economy company focused on accumulating mainstream cryptocurrencies. This pivot itself isn't the immediate red flag. Companies can and do change direction. The red flag is what happened to the stock after this brilliant new plan was announced and after they raised all that cash. Since this pivot, the stock has lost over 98% of its value. It hit an all-time low of just 4 cents on October 19th. Today's move to $0.059 is a 27% jump off a level that is already absolute rock bottom. The massive volume we're seeing today, likely hundreds of millions of shares changing hands, isn't long-term investors building a position in their Fidelity IRA. This is high-frequency trading and day traders using platforms like SoFi Invest and Interactive Brokers Trading to scalp fractions of a penny. This is a chaotic, speculative frenzy completely disconnected from any business fundamentals. The reality is that the $180 million and $28 million offerings were massively dilutive. The company sold an enormous amount of new shares, flooding the market and crushing the value for existing shareholders. This is how a stock goes from dollars to pennies, even while the company's bank account swells. They raised cash by selling the stock down to nothing. This is the absolute opposite of what you look for in a stable investment. When you use Schwab Intelligent Portfolios or build a diversified portfolio of Fidelity mutual funds, you are looking for revenue growth, profits, and a sound business model. Yueda Digital, in its last annual report, had revenues of just $343,000, a decrease of over 59% from the year prior. Its net income was a loss of $13.65 million. The company has a net profit margin of negative 3,980%. These are not the numbers of a healthy, growing business. These are the numbers of a company on life support, and the name change was its attempt to find a new, healthier body to inhabit. The 17 employees listed for the company are not managing a complex global Web3 operation. They are likely a skeleton crew managing the remaining corporate structure. So when you see this pop on a Fidelity mobile app or a Robinhood stock trading screen, you have to ask yourself, am I investing or am I gambling? Am I betting on a business or am I betting that someone else will be willing to pay $0.060 for my $0.059 shares before the music stops? Let's look at the chart. This isn't the steady upward climb of Apple stock or the explosive sector-defining growth of Tesla stock. This is a chart that looks like a cardiac arrest. The 52-week range is $0.04 to $6.69. That means people who bought this stock within the last year, perhaps believing in the old AirNet story or the new crypto pivot, are down over 99%. This kind of volatility is toxic for a real portfolio. This isn't where you park your retirement investment. It's where you might throw lunch money just to feel something. The problem is, for many, it's not lunch money. They see the low price and they go all in, not realizing that a 50% loss on a 6-cent stock is the same as a 50% loss on a $600 stock. The platform that facilitates this, whether it's the SoFi trading platform or Interactive Brokers, doesn't care. They just provide the tools for self-investing. They give you the rope. It's up to you to decide what to do with it. And right now, YDKG looks like a pure momentum trade, a game of musical chairs where the prize is a fraction of a cent. The company's new business model is, to be fair, simple. Hold crypto. But this introduces a new set of questions. Why not just buy Bitcoin directly? Why give your capital to a management team with this track record in a corporate structure that is burning cash and has just diluted their shareholders into oblivion, just for them to buy an asset you could buy yourself from your Robinhood crypto account? The expectation is that they have some special insight, some alpha. The reality is that you are paying a massive premium in the form of corporate overhead and extreme stock risk for secondhand exposure to an asset class. If you want crypto exposure, there are Fidelity ETFs or trusts that do this far more efficiently and with a more transparent fee structure. YDKG is a black box. We have no idea what strategic investments they plan to make. We don't know their treasury management strategy. All we know is that they raised over $200 million, and the stock is now worth a tiny fraction of that. The market capitalization is hovering around $10 million. Think about that. A company with $200 million in fresh cash has a total market value of $10 million. The market is screaming that it has zero faith in this management team to do anything productive with that capital. This stock is also facing a massive, immediate risk, a delisting from the Nasdaq. To remain listed, a stock must maintain a minimum bid price of $1 per share. YDKG is at $0.059. It is not even close. The only way for them to fix this is with a reverse stock price, where they might, for example, turn 100 shares at $0.059 into 1 share at $5.90. This is almost always a sign of a deeply troubled company and often precedes further share price declines. So any online investment in YDKG today is not just a bet on crypto, it's a bet that they can avoid a reverse stock price or survive it, and that management will suddenly become effective stewards of capital. That's a lot of ifs. This is a classic example of the tension between a flashy story and a disastrous financial reality. This stock's 52-week range is $0.04 to $6.69. That's a 99% wipeout. Comment below with one word. Is this stock a buy or a trap? So, as we watch Yueda DKG float around $0.059, up 27% on the day, let's summarize what we're really seeing here. The expectation is that this is a cheap, ground-floor crypto stock, a lottery ticket that's starting to pay out. It's accessible on all the major investing sites and apps, and it looks like it's finally found a bottom. The reality is that this is a rebranded, failing Chinese ad company that has pivoted to Web3 as a last-ditch effort. It has destroyed 99% of its value over the last year while diluting shareholders to raise cash. The market is valuing the entire company at a fraction of the cash it just raised, signaling a total lack of confidence in its management team. Today's 27% spike is not a fundamental shift. It is a speculative, high-volume churn, a flicker of electricity in a body that has already expired. This is not how you build wealth through online investing. This is not a candidate for your individual brokerage account at Fidelity or Interactive Brokers. This is a warning. The expectation is a new beginning. The reality, based on all the evidence, is that this is just the final, volatile chapter of a long and painful end. Disclaimer. This video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.